Ever wish you could slash your mortgage payment without jumping through a million hoops? If you served our country and have a VA loan, there's a hidden gem called the VA IRRRL. It could be your ticket to some serious savings. What is it and how does it work? Stick around because in a few minutes, I'm going to show you everything you need to know on a VA IRRRL. IRRRL stands for Interest Rate Reduction Refinance Loan. It's specifically designed for veterans and active duty service members with an existing VA loan. Think of it as a streamlined refinance. It's faster, easier, and comes with way less paperwork than traditional refinances. So what's in it for you? Well, for one, lower interest rates. This is the main goal of an IRRRL. Who doesn't want to save money?
No, we're not interested in money.
A lower rate means smaller monthly payments and potentially saving thousands over the life of the loan. I will show you a real example in just a minute. Switching to a fixed rate. If you have an adjustable rate mortgage, an ARM, and you're tired of the uncertainty, the IRRRL can lock you into a stable, predictable, fixed rate. It's a streamlined process. Remember everything you completed during the underwriting phase when you purchased the home? Verification of income, verification of employment, ordering an appraisal inspection. Fun times, right? Well, guess what? We do not need to do any of that on a VA IRRRL. The basics of a VA IRRRL are pretty simple. You must have an existing VA loan. IRRRLs are not eligible if your realtor convinced you to go with a conventional loan because
it is a stronger offer. Our VA loans are just too hard.
You must be current on your mortgage and have made at least 6 consecutive payments. And it has to be at least 210 days from your first payment date before you're eligible for an IRRRL. If you're in a fixed rate mortgage, which is the most common scenario, then we have to decrease your current rate at least 0.5%. So if your current rate is 6.75%, then your new VA loan has to be a minimum 6.25%. Hopefully we're going lower. So here's a real life example scenario. You have a current loan of $400,000 with a 7% interest rate. The new loan with fees and closing costs rolled in is $405,000 with a lower 5.75 interest rate. The difference in monthly payment is $298. VA recoupment test says we have to break even in 36 months or less for a VA IRRRL. So if total closing costs in this scenario were $5,000, well then $5,000 divided by 298 monthly savings is 16.77. Well, let's round it up to 17 months. So you plan on owning the home for at least another 2-3+ years, then the refinance makes sense. If you plan to sell the home in 12 months, then no. Refinancing does not make sense, and I'll advise you to not do it. Before you jump in, there are a few things to consider. Closing costs. While they're usually lower than traditional refinances, there are some fees involved during a refinance. The biggest fees are usually title insurance fees. Title insurance follows the loan, so if we are paying off one loan and starting a new loan, then we need title insurance again. There will also be a VA funding fee if you're not exempt from the VA funding fee. The good news is the funding fee is the lowest possible at 0.5%, and all of these closing costs and fees can be rolled into the new loan. So you can do a VA IRRRL and bring $0 cash to close.
Okay, party, bonus.
No cash out. The IRRRL isn't for taking cash out of your home. That is what a VA cash out refinance is used for. An IRRRL is used for lowering your current interest rate or switching to a fixed rate. Occupancy. Of course you can do a VA IRRRL on your current primary home. But what if you moved after a couple of years and turned the home into a rental property and it still has your current VA loan on it? Not an issue. We can still do a VA IRRRL even if your current investment property has a VA loan on it. This is amazing and does not exist with conventional financing. I am a veteran and I have a VA loan on my personal property. I get the same BS flyers in the mail showing rates much lower than reality. Y'all, these are scammy lenders that are trying to trick you into calling them. If you want the real deal and you want someone to shoot you straight, if refinancing makes sense, then use the links in the comments, reach out to me. If it does not make sense to refinance, I will tell you, and we are not going to let you waste money if the benefit is not there. Thanks for watching.